Hi, everybody. So, just making this mostly a beginner-friendly version of how to sell options, why we do it, and it'll be mostly Q&A. If you don't have much questions, then I could go over some more of the basics. So it's really pretty open-ended here. Um, First thing I want to make sure you guys are able to do is to enter in trades correctly. So I'll do this on Tasty Trade first, and then I'll do it on Webull. I'm not going to be able to enter it on Webull because of a cash account only, but I'll show you what to click on. So when you're looking at, say, the first stock trades, when you're looking at the put credit spreads that we do, so the one today I did on Nvidia, and it was, just gonna look at my Discord real quick. So for the option trade channel on Nvidia, we went to 216. We're just going to type in NVDA for NVIDIA. You go to the 216 expiration. So it says 39 days here, February 16th. I might as well show you it on Webull as well. Let's see what the, I think. We're just going to find the expiration date for the 216. And then on the left side of the screen are the calls. On the right side of the screen are the puts. Pretty much every brokers I know that does that. Okay. It's been a long time since I looked at uh, this one, but let's see. Options trader. And then you would just type in your ticker symbol. Wherever that is. I'm probably more confused than you are at Webull.
No.
It's been a long time since I even used it. Um, if you could find a way to put in NVIDIA here, you can see the different strike prices come up. I'm not sure oh, I'm on like AT&T or something here. Yeah, we could do it here. NVIDIA. Options trader. All right. Yeah, here we go. So this is the NVIDIA option chain. You'd want to find the expiration date. You did 216. There we go. So 216. The first number is the number that you sell the put at. The second number is when you buy the put at. So I wrote 445 and 440. The 445, you want to click on the bid price right here. It's on the left side of the right column. And then for the 440, the second number, we're going to buy that. So you want to click on the ask price right here. Now, I don't have option spreads on Webull, but you would have to have both of those connected there. So if you click on both, it should come up. It won't come up on my end, though. Does that make sense, Leslie, how to enter in those trades?
Okay, so if you want to buy a put, you just hit the ask.
Yeah, exactly. And then
Okay,
if
and
you're
if you want to
selling, it's the
sell the
bid.
put, you just hit the bid.
Right. And then if you do both and click both the way I showed it, it should be a spread that way.
Okay.
It's not coming up on my end because I don't have clearance for spreads on Webull. But I'll show you, it's the same steps in Tasty Trade right here. So again, go to like 216. We're selling the 445. So I'm going to click the bid on the first number. And then on the second number, the 440, you click on the ask. And that's what should make it the spread. So I gotta move all that stuff out of the way. All right. So if you look down here, you'll see -1. That means you're selling the 445. And then just a regular one means you're buying the 440.
Okay.
And then any other questions how to enter in a credit spread? Any other members or Leslie as well?
And this is called a credit spread.
Yeah. So the reason why we do this is we could just sell the 445 put. And right now, Nvidia was around 520s or so. It's a big bid ask right now. Let's just say it's around 510 or so. The odds of it going down to 445 in the next 39 days is relatively low, I mean, it's near an all-time high right now, and it's gonna have to drop quite a bit to get to 445. The issue is if you wanted to just sell the 445 put, it's gonna need 100 times that number because options involve 100 shares of stock. So you're gonna need 445 times 100 or $44,500 just to sell one put. Okay. However, if you do this as a spread where you buy the 440, essentially your max loss would be the difference of these numbers. So if you just subtracted 445 minus 440, it would be 5. And then again, 5 times the 100 multiplier, it'd be only a $500 max loss. So what's neat is your brokerage will let you do this trade that I'm showing with as little as $500. It's actually slightly less than that because you take in some money when you start the trade. And that's essentially why credit spreads can be very helpful for smaller accounts and able to control, how many positions you have as well. All right. Any guys in here want me to go over any other type of trades, like how to enter them in correctly?
Can I just ask a quick question here on
Yeah.
okay, so down at the bottom of your screen, you see where it says 0.36
Yeah.
right there?
Uh-huh.
Okay. That is it usually comes up as CR or DBA.
Right.
That would be your credit or debit. Is
Right.
that correct? Okay,
Yes.
that being the case, when I see somebody putting out like a any kind of vertical and you
Uh-huh.
say buy at, and it's got that app symbol, and then it says this amount. That's what they're talking about, right?
Yeah, most likely.
That number.
If it was a credit spread, then yes, it should be that number. If it
Okay.
was a debit spread, so the difference is in a credit spread, you're going to see the CR. You're taking in premium when you start the trade. In a debit spread, it'll say DB, I think. I'm so not
Right.
used
Right.
to doing debit set. It shows that. But then that would be the max loss if you do a debit because you already know going into the trade if you did a put debit spread. So if I just
Right.
simply switch these around like that, it's going to say
Right.
DB on it. The max I could lose on this trade would be the 36 or so dollars. Okay.
Okay. I get that, but I'm saying with like when you guys put out your alerts and it says buy it at that number, they are
Yeah,
talking about the number that's in that box.
exactly. Yeah.
Okay.
So,
Okay.
like in the one from today for Nvidia, I said for point 41 or more. So I got 0.45 when I was doing the trade. It was at 0.45, but
Right.
the limit price from down here to the natural price over here, it was around 0.4 or 0.39 at the time. So I said to try to get at least 0.41, which would be somewhere around here. And also, if you get into the trade a little bit after me, or if you check tomorrow morning, it might be a little bit different. I think it's worth the risk return if you get at least that 0.41. So yeah, that's what I mean when I write 0.41. That'll be a credit, not a debit.
Okay. So on the debits, you don't write anything.
No, I don't do trades that are just debits though. So all the trades I do have a net credit in them because
Okay.
our main goal is to take advantage of the theta decay. So just looking at this trade that I put on, this is the opposite of what I normally do. This is called a
Okay.
debit spread, where I'm buying the put a little closer to the actual price, and I'm
Okay.
selling the put even lower than that. I would want Nvidia to go down really far on this particular trade, because then it'll be worth the difference of the $500. Okay, they're pretty much the exact opposite. But this is a pretty low percent chance of happening because Nvidia would have to drop from the 510 or so where it closed all the way below 440. And you only have the 39 days to do it. So that's a pretty low percentage chance happening. But that's why
Right.
you're
Right.
only
Right.
risking, say, $37. Okay.
Okay.
Good
All right.
questions.
Good deal. Sounds good.
Yes.
Hi, Aaron. Yes.
Hey, Yeah, I just had a quick question about,
Yeah.
now that's a bull put, right, that you're talking about, that,
This one right
the
here
credit,
would be a bull put, yes.
yeah. Um, is there any reason not to just let it expire worthless?
You perfectly, sorry, could do that. Yeah, there's nothing wrong with that because another person's coming in. If you don't want to be as active managing these and you just enter the trade, you wait the 39 days until it stays above 445, and then you just let it expire worthless. There's nothing wrong with that at all.
Okay, I didn't know if there was anything that, you had to worry about besides the price.
No, as long as the price is above these numbers at that expiration date, you're perfectly good. So that's an easy way to figure out the percent return is you just look at how much credit you took in. I took in $45 or so. So if I just write 45 divided by the, again, difference of these,
Yeah, a
subtract
little over
it,
10, a little over 10%.
you're getting about 9% or so. It's closer to 10 actually, yeah. Because you're gonna
Yeah.
use about $455 or so.
And that's pretty decent for that amount of time.
Yeah, I know. If you could get 9-10% in 39 days every time, you're gonna do really good.
Yeah,
Oh, I love that. Yeah.
thank you, Lance.
So yeah, no problem. So the pros and cons to that of waiting until expiration. Some of the pros are you know exactly what return you'll get because 39 days, you get your 9%. You could calculate that out. Um, it's less to actually worry about. You can live your life and do what you need to, right? So those are some of the pros. The cons are you do have that opportunity for it to drop at any point. So you do have 39 days where bad news comes up out of nowhere and then it drops to 400 and then there's not much you can do about it. That's one of the big cons to it. So I personally like to look a little bit into like pretty much once a day. It might only take me about 2-3 minutes to see where all my positions are. And then I just manually calculate what percent the gain would be if I closed it. And an easy way to do that on like Thinkorswim or Tasty Trade, you'll see the profit and loss. And if you know you're doing one contract of $500 and then it shows a gain of say $20, you just do 20 divided by 500 and you're making 4% in that case, right? So that's why I personally like to do those a little bit more. It's not being super active. It literally takes a few minutes a day, but it's definitely up to you. One of the big things about doing these trades is you want to have a fine line between how much work do you want to do on it and how much free time you want to. So, you don't need to be staring at your screen every minute of the day to do these things and still be really effective on it. And if anything, it might be a detriment if you look every 2 minutes, every minute of the day, you're like, oh, what happened with the stock? There's other things you can do in life, right? Vandal, you wrote, is there any way to get a sign or is 500 the absolute max loss? Yeah, I think you asked me this question about almost a year ago. Theoretically, you could lose more than that, although it's extremely rare. So what could end up happening is, let me stop that. Okay, so what can end up happening is if you sell a put, you have the obligation to take 100 shares of the stock at the price you're selling the put at if the person on the other side of the trade wants to do it. Now, most cases, they're not going to necessarily want to do that. If you're selling Nvidia at 440 and the stock's at 520, they wouldn't want to exercise their option. It wouldn't make any sense because then they're essentially needing to make up the difference, whoever bought the option, right? If the stock was right at the same price, 445, then it still doesn't even make sense to do that because there's going to be some premium that they're actually giving up in premium because they're exercising the option. The only time, excuse me, only time it might make sense to actually exercise early is if the stock drops really, really hard and there's possible dividend coming up where they want to take in the dividend and take in the shares. That's pretty much the only case you'll see that happening. And in most cases, you'll have to be really far away from the price. So theoretically, let's say overnight, Nvidia had an absolutely humongous loss, and then tomorrow it's gonna open at like, I don't know, 300 or something. They could theoretically exercise the put where you would be essentially agreeing to sell it at about the 300 where it opened, but you have to buy it at whatever your strike price was. And then the stock could continue to go down after that if you're not ready for it. That has never happened to me once. And it the only time I actually got early assigned was a good thing because I had Intel about 5 years ago where I sold a covered call. That's where I buy 100 shares of Intel and I sell a call against it. It happens to shoot up way past it. Excuse me. And then it just got assigned. Excuse me. Losing my voice. Teacher voice is going. That makes sense, Vandal? All right. Leaving it up for other questions as you guys have them.
Okay, yeah, if you don't mind, can we go over your January 5th MES strangle line number 7?
Sure.
So what I'm seeing here is that it says 2x. Okay, so you're talking about a stop loss here. I'm gonna open. Oh, I got the message to open up over here. It says 2x. So your stop loss is at 2x. So around 40. 2x is the premium,
Yes.
or what is it?
Yeah. So when I started the trade, I got about 20. It might have been slightly less, 19.5 or something. Let's just say it was at 20.
Okay.
That's the premium that you're taking in. And then
Yep.
you can multiply by that by 5 because MES is a 5 multiplier. So I took in 20 times 5, took in $100 for that trade, right? My
Okay.
goal is to close it at 50% profit. So that would be 10. If I close it at 10, it's 10 times the 5 multiplier. I'd close it for $50. So since I took in 100 and I lost 50 when I bought it back, and I would win $50, right? Now the stop loss that you're asking about is if it goes up to 40 or 40 times 5 is $200, right? I'm essentially going to get out of the trade if the premium was at the 40 instead of the 20. Okay.
Would you? How would I find out what my premium is? I'll head over to Hasty Trade and maybe you
Yeah.
can get
If you
that
go on
out.
to the easy way to do it, to be honest, is just to look at the percent P&L open and it'll
Okay,
show you
P&L.
what percent it is. So if you're at 100% P&L open percent, I'll share my screen. So if you're at that 100% P&L open, then you can just close it out at that point.
Does it
So
have percentages on P&L opens,
in your
or does it just
positions
have it?
tab, you could click on the little gear icon and then change what's displayed in your main position tab. The one that you should look at is P&L open. Could be P&L
Okay.
open change.
Okay.
And then that will show the percent up and down I am on different positions. So when I look at any trades, if I know that in my trading plan I'm closing it at 50% profit, that's what I mean by that. If the P&L open percent shows 50%, that's where I would close it. If the P&L open was at negative 100%, that means I essentially lost the same amount that I started when I took it in. So again, if I took in $100 and then it's down $100, I'm just going to get out of it. Okay.
Okay, so you got P&L open with percentage bar.
Yeah.
Is that what you got?
I don't use the bar. You could, but I don't like it as much. It's
Okay,
P&L
there's a
open change, I think.
P&L open.
Find the one that says change. I'm pretty sure that's the percentage one.
Okay, I will just open that up and look at what you're looking at. Perfect. Thank you.
And yeah, and then there's all these other P&L ones. You could just fiddle around with them and notice it. Like the P&L open is perfectly good too. And the percentage bars, like if you're really more of a day trader and you look at your stocks a lot, you can do P&L per day. I sometimes look at the P&L per day. On my phone, I actually have it at slightly different settings on the brokerage right now. So I usually look at the P&L per day sometimes. But that's up to you. Fiddle around with the different ones and see which ones you like. Probably the best way
Yeah,
to do
yeah,
it.
I got you.
Okay.
I'm trying to figure out what the best tools for the job is for the
Yeah.
easiest. Yeah.
Do you have any questions
So,
how to enter the strangle?
okay. That's another thing I wanted to ask. The strangles. I'm trying to master my strangles today during this episode here. You, okay, are they always sell a put, buy, or sell a put, sell a call?
For a strangle, yes, that's all we're doing is we're selling the put and selling the call. The first number
Okay,
I give is the put, the second number I give is the call.
perfect.
Now, when I usually do my strangles, they're usually pretty much the same delta or very close deltas in almost every case. So
Okay,
for instance, if I was looking at a strangle, it might be 102 days. My sweet spot is around 0.05 to 0.09 or so delta. Because if you go
okay,
too high of a delta, you're really close to the current price, and then that could easily go away from you and get challenged. If you go way too low of a delta, you're just not taking in enough money to make it worth it. So again, and as you do more trades, you might notice some deltas you might like a little bit more than others. It might take a while before you get to that point, just based on statistics and probabilities. But I like around 0.06, 0.09 or so delta. So all you do is you click on the bid on the put side, and then you click on the bid on the call side. I'm just making a sample one here.
great.
Here. I have to get rid of the other ones. All right. So click on the bid of the put and the call. Good to go. Just review and send away. Then what I do, just to make it really easy, whenever I have a position opens, I just set the good till canceled order at the profit that I want. Okay. So here's a strangle that I have here that I did earlier. This is about a month ago. Just click on the positions, right click, and then you could just literally do close position 50% profit. That's how I'm doing it. I usually just manually like to calculate it just to make sure that I'm getting the profit that I want. I'll just do close position, type in the 50% number. So if I took in 20, I'm gonna put 10 here. And then make sure you set it as good till canceled. And then you just let it be. It's really all you have to do. That make sense?
Good till cancel. Where do you go for that? Good
It's
till
on the
cancel.
bottom right here. See where it says, it normally starts as a day order, but then you want to change it to GTC. That's good till canceled.
Let's see.
So that means it keeps the order there until it tries to get filled. And if it doesn't
Okay,
get filled, then you just wait until the next day. Because otherwise, if you do it as day order, you'd have to do that again the next day. So if you just do GTC, you just let it be.
okay. Oh, that's useful information. Thank you.
Yeah, no problem. I literally do that with every strangle and every naked put I have here.
Okay.
I think there's a way to show it on working orders. Yeah. So if you look at working orders, I have a bunch of these that are just GTC orders. See GTC limit two, limit two, limit two. I'm just trying to get close my naked puts and the safeguard trades at two. And I'm literally just waiting it out. So really
Yeah, yeah.
straight,
I'll get
just
there.
really hands off after a while once you get used to it.
I got you.
Okay. All right. Vandal had another question there. Let me see what he wrote.
Oh, sorry.
Isn't there something we said that if it drops so much, says a put credit spread, the 440 part wouldn't have a lot of value? Yes. And good question. Let me think about the best way to answer that one. Let's see if there's a whiteboard. Forgot where the whiteboard is. Zoom. I don't get Zoom sometimes. I just want to draw. Is that too much to ask here? Apps. Let's try an app. Whiteboard app time. What? Oh boy. Let me think of the best way to do this. Unless someone knows where the whiteboard is. I don't know where. I can't find it. Eh. I'm trying to draw
Well,
on.
what is a whiteboard?
I just want a like a blank screen that I could draw on. But I thought Zoom had it. I don't remember. All right. Let me do it this way. Just give me 1 second. All right, so well, it's a good question. So it's based on when you look at a credit spread, it's a good exercise to figure out what the max loss is. So Nvidia was around 5, 20. And let's say we sold the 445 and we bought the 440. And just to make the math easy, we took in, say, 50 bucks. Okay. Now, the definition of a credit spread or bull put spread, the max loss will always be if it goes below where your bought put is. So let's just look at the reason why. Let's say it went down to the 440. In this case, the sold put that you sold at 445 would essentially be exercised at 445, but the stock's at 440, you would lose 5 per share times 100 is $500, right? Now, if the stock was exactly at 440, this would be worthless because it's at the exact same price. I wouldn't want to buy 100 shares at 440 and then I could sell them at 440. It doesn't make any difference, right? So this is at the 440 price. Now, let's say it dropped even more than that. This is what Vandal was asking. Like, what if it goes to like 200? Let's see what happens at 200. From the 445 to 200, that's a huge loss on that. You lose 245 times 100. You're down $24,500. But if you bought the 440 put, that's going to be worth a lot of money, right? Because they're essentially agreeing to buy at the current price of 200. You can sell it immediately at 440. Essentially subtract those numbers. It'll be 240 times 100, 24,000. But this is a plus 24,000, right? The sold put you lost 24,500. The bought put you made 24,000. 24 is essentially cancel out. You're still down the $500. Okay. Essentially, what happens is whenever you're at 440, for every dollar it goes down here, you would make $100 here, but you would lose $100 on the sold put. It essentially offsets each other. Okay. So I know it's Vandal's question. I don't know if you could respond in the chat if that makes sense or not. The max loss is if it gets to that bought put. That's pretty much all you need to worry about. Okay.
Yeah, max loss would be 500 and the max gain would be 500.
The max gain is whatever you take in when you start the spread on a credit spread.
So the $50.
It'll be the $50, yes.
Yeah. Okay, perfect.
You can never make more than the max. Sorry, in a credit spread, you cannot make more than what you initially took in on that individual spread. Okay. That's one of the limitations to selling options. You pretty much know the max you can make when you start the trade. You can't make more than that. However, the probabilities are on our side, and there's a good chance we're going to work out. Okay.
Okay.
All right. Vandal said if it's at 443, you can figure out the math on it. I'll do another color here. So 443 445 minus 443, that'd be down 200 on it. The 440 wouldn't be worth anything because it's above it. So I'm still at 0 here. My net would be negative 200. Essentially, you take whatever the sold put is and then subtract it from the price at expiration. That would be the loss at the time. And it could be up to the $500. Now, we don't get to those situations. That's why we stop out of trades. I know you're worried about gap downs and it's going to drop, 50% out of nowhere. It's very rare, one, and two, you'll most likely stop out and you'll have some time left anyway. So the worst case scenario is you held it to like the expiration day, and then on the last day, some big news comes and the stock drops below your bought put. At that point, then yeah, you could be a little bit screwed. But hasn't happened to me in over 5 years. So
Hey,
Okay.
Lance,
yeah,
how
so
do you
yeah, if you're
determine,
next. Go ahead, Aaron. Sorry.
sorry, how do you determine the timing of getting into a trade? Do you look at the moving averages, or do you look at the RSI or anything like that in particular?
There's a few things I look at in general. I'm not gonna have a lot of time to go over everything here. The main things I look at are, is it in a recent support or resistance level? All right, so just to look at SPX, for instance. If the stock's currently at 47.63, I would want to try to make sure that my trade was above these levels right here. You see it bounce
Yeah.
down, bounce down, bounce down.
Yeah.
It's not a great case to look at because it's so bullish. Let me just pick a random one like Apple that I actually got stopped out on. Oh, that's only the 1 minute chart. I need to look at around 3. So good point here. I always look at the 3 month chart on the daily. So
Okay.
here you could see Apple was around 180 or so, and then it dropped down pretty quick. And then it got to the 165, bounced up. I would want to sell a put below this 165 if I could, because there's a good chance it would bounce up from there. That's one of the
Okay.
main things I look at. Now, ideally, this happens more than once. It's been very bullish in general. It's going to be hard to find one really quick. But if you saw, like right here again, a few different points where it bounced from it, 330 would be a good price to actually sell at. And I think I recently sold around there anyway. RSI and stuff like that is other things. I only have a few minutes, so I'm trying to answer quick here. But RSI, I want to look for a little bit of bullish. So the line going upward to the right, over downward if I could. If it's already at over 70, which is overbought, I typically don't like those because it might start turning down. And then moving averages. This one I have here is just 3 different moving averages. I think it's 9 days, 20 days, and 50 days. So if those are all bullish, I tend to look at that. But if they're not all bullish and the RSI isn't showing anything, I want to make sure I could sell below a recent support level. And then I want to make sure that the premiums are adequate enough where I'm getting at least $25 on the 5 with, ideally maybe more like $35, $40. Does that make sense?
Yeah, thank you.
Okay. Got about 2 more minutes. If anyone has any last second questions here.
I got one more question. Okay, so back to the credit debit spread. If it goes above the 445,
Yeah.
that's not going to hurt us.
If it stays above it,
Yes.
yes. If it stays above it and it gets
We're good.
expiration, you made your full profit that way.
Okay, perfect. That's all I got. Thank you.
So what you can do is set an alert price. You can use Yahoo Finance if you don't have Thinkorswim. Yahoo's free. You can just type in your stock and then you can set an alert at or below a certain price. So for
Okay.
Nvidia, it was at 445, and then I set alert at 455, I think it was. So then you can use Yahoo Finance for free. If you have Thinkorswim, you can just set an alert on Thinkorswim at or below that 455, the one higher.
Mhm.
And then if it touches that, if it happens right away, I'm going to get out right away. If it happens near expiration, I might just look at it and wait.
Okay, thank you.
Alright.
Perfect.
Leslie or Jamie, or Eric, any other quick questions?
Not at the moment that I can think of.
Okay.
No, not right now. I just need to figure out how it's done on Webull, and I can look at some YouTube videos or something just to kind of.
I'll look into more help with that. I'll DM you those.
Okay. All right. Thank you.
Yeah, I wish I could help more on Webull, but I don't use it for that, but it's not that hard. I know it's pretty straightforward to actually sell options on.
Okay.
It's pretty much the same exact steps I showed. They'll just look slightly different on your end than what else. All right, guys. So thanks for joining in. If you have any other questions, feel free to send me a message just one-on-one, or you guys the group. And so have a good rest of the evening.
Thank you.
Thank you very
Have a good
much.
day.
Thank you, Les.
Thank
No
you.
problem, guys. Have a
Bye-bye.
good rest of the evening.
Affiliates.
Bye.